this is Matt on the Moon Lambo channel. As I go through this first story, please keep in mind that XRP is at the center of everything that Ripple does. Ripple is the largest holder of XRP, as you well know, and they have the most to lose if something goes horribly wrong with it. And Wall Street, to be clear, Wall Street well understands this. And how has Wall Street responded? Well, a couple things. First of all, there's two questions. How has Wall Street responded to XRP and how has it responded to Ripple? As far as it pertains to XRP, how has Wall Street responded? By investing nearly $1 billion in ETFs in 17 business days. Yeah, and no, that's not actually where I'm going with this. It's just, in addition to that, though, as it pertains to Ripple and XRP, Wall Street has invested $500 million. $500 million in Ripple itself. And this is effectively the same thing as Wall Street itself protecting XRP and giving it a vote of confidence. It is effectively the same thing. If Wall Street is behind this whole thing, frankly, the odds of XRP ceasing to thrive become that much smaller. And to be clear, even prior to all of this, XRP had already become an obvious early winner in the crypto space. If you're just paying attention, you can see it. If you're unbiased and you just look at the state of things, if you look at the XRP ecosystem, you look at the fundamentals, it just is an obvious early winner of the crypto space. And as far as I'm concerned, this $500 million investment into Ripple, this just cements it. This is the cherry on top, so to speak. Wall Street recognizes the real world utility that XRP offers today. And the Bloomberg article I'm going to run through, just a few key parts of it anyway, perfectly highlights that. But before going further, I do want to be clear, I do not have a financial background of any kind. I am not offering financial advice, and you definitely should not buy or sell anything because of anything I say or write. I'm just an enthusiast who enjoys making YouTube videos about crypto-related topics, but just as a hobby and just for fun. All right, so look at this brand spanking new article from Bloomberg. It's titled, Wall Street Hedged Big Crypto Bet in $500 million deal, Ripple deal. And this is published just yesterday. And it reads as follows. And we did get some insight. By the way, they have a quote directly from the president, not CEO, but the president of Ripple on a potential Ripple IPO. I'll give you the update on that as well. It's in this article. But anyway, piece reads as follows. Ripple's $500 million share sale in November drew some of Wall Street's biggest names and marked a milestone in crypto's evolution from fringe asset class to mainstream finance. Investors including Citadel Securities and Fortress Investment Group backed the firm at a $40 billion valuation, a record for a privately held digital asset company. But the structure of the deal also highlights the careful approach some institutional investors are taking as they wade deeper into the volatile sector. It included crucial protections: the right to sell shares back to Ripple at a guaranteed return, and preferential treatment should a major event like a bankruptcy or sale occur. Now, folks, you could look at it as, wait a minute, maybe they're not fully confident that, no. This is the type of deal you would expect to see from traditional finance. It's just that crypto's growing up. This is the type of stuff you would have expected in traditional finance. It's about protections, okay? And by the way, there are two sides to this coin, as you'll see as we get slightly further into the article. Ripple's actually got an opportunity as well, in the form of a buyback. Anyway, piece continues. To some of the investors, Ripple was essentially a bet on a single cryptocurrency. Folks, I just got to pause and say already there. That, I don't know how everyone's going to take that outside of our community. Like, to me, that is freaking baller. I want that to be true. I do believe that's true, actually. I've said for years and years and years, XRP is at the core of everything that Ripple does. Duh. Obviously, this is the case because they're the largest holder of XRP on the entire damn planet. So if something goes horrifically wrong, like I said in the intro of the video, yeah, they're in trouble then. They're in serious trouble. And given that XRP is at the core of everything Ripple does, and yeah, of course, if Wall Street's going to invest, they well understand that. They understand that XRP has to thrive in order for Ripple, as currently structured, to truly thrive. Now, of course, with Ripple expanding out, they'll become less reliant upon XRP. That is true. You can think with the purchase of Hidden Road, which is now Ripple Prime, and all the custody companies. But still, XRP's in the back of their mind is they've gone through all these acquisitions. All these things are also great for XRP. It just is the case that as things stand right now, in terms of the valuation, XRP's a huge factor. And I actually have more to say on that. Let me read a couple more sentences here. Anyway, Peace continues. 2 of the funds that put in money assess that at least 90% of the company's net asset value derived from a crypto token called XRP, according to people with knowledge of the matter. As of July, Ripple held $124 billion worth of the token, much of it subject to lockups and a gradual release. Okay, so Wall Street obviously is expecting that XRP over time is going to increase. If they didn't believe that, they would not put this massive amount of money into Ripple, which again, XRP is at the center of it. They just wouldn't do it. They are fully confident that XRP has a high probability of moving way, way, way higher in price than it is today, or they would not be doing this. Okay? And so also you might be wondering, wait a minute, so Ripple the company, $40 billion valuation. Okay, pretty cool, very large. A little bit record-setting in a way. I mean, as the article cited here, that's true. But wait a minute, Ripple held, at the time they published this, $124 billion worth of the token. Well, how come Ripple the company then isn't worth at least $124 billion? Well, the answer is that if Ripple were to try to sell all that, let's say they could. Let's say they had access to all of their XRP right now, and they could dump it on the market. They would never realize that $124 billion worth on paper, because it's just on paper, effectively. It's on a spreadsheet somewhere, right? It's worth that in theory. But the second they start dumping the market and there's a massive quantity of supply available on exchanges the world over, the price plummets and they're never going to get anywhere even close to $124 billion worth. Now, of course, the vast majority of their XRP is in escrow, so they can't dump it all. But even if they dumped the full escrow release, which would be 1 billion XRP each month until they ran out, they're going to suppress the market. They're going to reduce confidence. People are going to freak out. On the institutional side, there would be panic in the streets for some period of time. And Ripple knows this, so of course they're not going to do this. And it's not like Ripple can literally break XRP. I'm just saying they absolutely, if they wanted to, they could for some period of time harm the price of XRP, but only for a short period of time. But again, that's not in their best interest. It never made sense for them to do that, so of course they haven't. That's the concern that people were spouting when I jumped into crypto and bought XRP for the first time in 2017. People were citing that concern back then. And I was like, well, I mean, I guess they got the ability to do it. That's what I was thinking, but they're probably not gonna because it would harm themselves. So duh. And here we are over 8 years later, and duh, they haven't been selling enough to materially cripple the market. Duh. Like, it's just so obvious. But since they can't actually realize all of that, as a result, that's why their company isn't worth $124 billion. They'd never be able to realize that if they started dumping on the market. But again, they can't. But that's the reason why. And so everybody understands it. And as a result, the valuation for Ripple, the company, is much lower than what their XRP is worth on paper right now. That's the answer to that. And then let me jump down a little bit further here. I think, was this? Here we go. This part. This is what I want to highlight. The funds investing in Ripple were given the option to sell their shares back to Ripple after 3 or 4 years at a guaranteed annualized return of 10% unless Ripple goes public within that time frame, according to the people. Ripple, in turn, and this is where they get theirs too, Ripple, in turn, can decide to repurchase the shares at the same junctures, but must then offer the investors a 25% annualized return, the people said, asking not to be named, discussing confidential terms. Okay, so that means Ripple's getting the benefit of these extra funds in the short term, and if things are going so fantastic, so ridiculously well, Ripple's worth a fortune, maybe XRP's way, way, way higher, all sorts of stuff's happening, firing on all cylinders, then Ripple could be like, wait a minute, why don't we vote on ourselves and buy our own shares back? And so in that situation, those firms would, once they see the results, they'd probably rather hold on if they think that the rocket ship's just going to keep going higher and higher and higher. But they're not going to get the opportunity if Ripple wants to buy. Ripple has the first right to purchase those back. So see, that's the trade-off there. So there's a protection. So At least they'll get something, though. It would be 25% annualized return. So that's why I'm saying it's not so bad that they want protections. That's not a sign that they're not confident. They wouldn't be doing this if they weren't confident, but they don't want to wreck themselves in case something does unexpectedly go off the rails. So that makes, and it protects Ripple. That's a financial benefit for Ripple if they want to buy their shares back. And they have bought shares back before, by the way. I've reported on that. It's not outside the realm of possibility that they do that. I think there's a reasonable chance they actually would. So we'll see. But Wall Street well understands the utility. Like I was talking about at the outset of the video, they understand XRP is functionally useful. They would not be doing any of this if XRP were not functionally useful, or else what the hell? If it weren't useful, do you think that Wall Street would put $500 million into, like, for instance, a meme coin? Like, here's a company, it's worth $40 billion, and it's what's backing it? A meme coin that doesn't do anything. Would they do? No, they wouldn't do that. It's because XRP is functionally useful. And I came across this article that I just shared with you thanks to my fellow XRP YouTuber, Crypto Eddie, so shout out and credit to her. And she shared this post writing about this. She wrote, a new Bloomberg. 3 interesting article takeaways. Wall Street hedged big crypto bet in $500 million Ripple deal. That's the title, of course. Number 1, investors protected themselves with put options. That's a right to sell shares back to Ripple at a guaranteed return, and preferential liquidation preferences. 2, XRP. XRP plays a key role in liquidity/settlements, capturing about 8% of crypto payment gateways. And 3, the deal boosts XRP's institutional credibility, potentially driving price up 312% year to date to about $3 to $4 range. Analysts see $5 plus by 2026 if partnerships like MasterCard settlements on XRP Ledger scale. Yeah, so there is just so much opportunity here. There's just tons and tons and tons of opportunity here. And Wall Street gets it. It's just cool because we, who have been here in the XRP community for years and years and years, we got first crack at this thing. We were here in the trenches when the SEC was coming after us and coming after Ripple. And we won. And we're on the other side of this thing now. And Wall Street's playing catch up. And it's just so cool to recognize, like, where the price of XRP is right now. This is the starting point for Wall Street. This is the starting point, okay? XRP above $2 is the freaking starting point for them. They're here for the long haul, obviously. So I can't even fathom, like, what would have to go wrong for this thing to fall off the rails. But, I mean, think about it. XRP's tried and true. It's been around over 13 years. I just think it's just going to keep getting better and better and better. That's my bet anyway. I'm not a financial advisor. You should not buy or sell anything because of anything I say or write. That would be a very, very, very bad idea. Until next time, to the moon, Lambo.